We'll see you around the timeline. Feels good to be back.
I think The Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at VanEck Day 1 here. I'm Jesse from Base. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the roll-up.
Zoom out. The institutions aren't coming. They're simply here. It's the golden age of crypto, guys. Get right. Let's go.
Welcome to the nest. See you on the show. Guys, welcome to the bull market. Welcome back to the roll-up, August 4th, 2026. We are here live from South Florida, fresh off a trip to Vegas. Incredible times ahead. I don't know about you guys, but it feels like everything's about to come crumbling down or go absolutely ballistic to the upside. This is the state of the world on chain, and it feels like it's everything is happening season. The U.S. is intervening in Japan's national currency. Saylor sold $100 million worth of Bitcoin. King's Clips is here in the chat with us. Ethereum is decreasing or proposing to reduce the inflation to Ethereum, along with multiple other L1s. Yes, King's Clip Saylor is selling. Ethereum is reducing inflation. Solana is reducing inflation. Near is making a proposal to pay validators with treasury yield so that they don't have to inflate their token in order to pay for the validator security. So incredible things are happening on the timeline. Tokenized equities are here in the US. Big shout out to Dinari. They're partnering with Circle. We've got more things at play here. Tons happening. Clarity is on the precipice. It's do or die for Clarity. These are the things that are happening right in front of our eyes as we draw towards the end of the bear market. We appreciate you guys being here with us. King's Clips is in the chat. We've got a big shout out to Plume at the Tokenization Tower. We've got big old bulk of our team that is in person there. I'm in South Florida, and we are experimenting with some new content formats this afternoon. Guys, stay tuned. Very, very excited for the launch of Atan on the streets. You guys know Atan. You know him. You love him. And he's going to be on the streets very, very soon in a city near you, getting to know all of you, asking questions, getting answers, finding out more on the streets with Atan. And today's topics. Tremendous show. Welcome to the Rollup. Squid has their token generation event. Squid's TGE, they were a leader in the interrupt space. They're going to be joining us and discussing TGE and the current market conditions. Gotta say, feels like the most opportune time to launch a token right now. Feels like we are at the precipice of a massive rally. That is when you want to launch your token. That's when new token listings can paint a very beautiful chart. Then we've got VanEck's title on VanEck. We know VanEck very, very well. We've got Matthew Sigel that is going to be joining the show for us today, the PM over there at VanEck. And then we've got Spire Labs, very Ethereum focused. I'm glad that we have this proposal from Justin Drake and company to reduce Ethereum inflation the same day that we have Spire's team joining the show. They've got an exciting announcement. And then Dinari's co-founder, we've got founder spelled wrong on today's topics. Let's make sure we clean it up, guys. Come on. Behind the scenes, I hope we're paying attention. Dinari's co-founder is going to call in. Dinari had a Fortune article today that went live announcing that they are coming to the US market and they're bringing tokenized equities with them. Today's topics, as always, powered by Trezor. Exciting or destabilizing times in the self-custody world. The cold card exploit is raining havoc, but Trezor can keep you guys safe. John, hi, welcome to the show. Thanks for rocking with us. And before we move on, guys, I'm going to tell you about Near. I'm not going to tell you about Near. I'm going to tell you about Frax. Frax is our stablecoin partner, open, stable, and borderless, genius compatible. I had a great chat and sit down with Frax in Vegas. Sam is based in Vegas. He's talking to the Secretary of State of of Nevada, and doing incredible things. There's a lot of large institutions in Vegas. You guys know them as casinos, but the reality is that they turn around billions of dollars and they can massively benefit from stablecoins. And so Sam and I had a great discussion about this, and they are ahead of the curve as it pertains to US regulation in the stablecoin market, becoming genius compatible before all of the other stablecoins. Big shout out to Sam and Frax. Next, the weather. It's hot, no surprise, and it's hot, sponsored by Relay. Let's keep it moving. We've got plenty of tweets to get through today. Today's heat is sponsored by Relay. 85 degrees, patchy rain nearby. King's Clips, very nice day in New York. That's why we've got our friends going on the streets. Before we get it over to our market segment, big shout out to Dinari on a day in which they've got some exciting things happening. Dinari had an article come out. They are bringing tokenized equities to market at scale. They have D shares. And the cool thing about D shares, you might think tokenized equities, how many SPV wrappers am I going through? Well, these are actually stocks. These are actually equities. They give you all of the same benefits, shareholder rights as typical stocks do. Dinari's advantage is that these shares are positioned as securities under U.S. securities law rather than around it. Regulated posture is what a broker-dealer's risk committee is signing off on. So big shout out to Dinari, and they are now bringing tokenized equities to U.S. investors. We're going to get into the nuances with Dinari about why it's important that U.S. equities, tokenized U.S. equities are in the U.S. market, because a lot of the value proposition around tokenized equities has been, hey, we're going to bring U.S. equities abroad. We're going to broaden access abroad for the U.S. equities market. Everyone wants demand. Everyone wants access to these investors. U.S. investors, they can already open U.S. brokerage accounts. So we're going to get into why it's important that we also tokenize U.S. equities for U.S. customers. We're seeing essentially flat, but man, I was chatting with my co-host, Andy, and man, the thing that we're seeing play out here, it really does feel like this seismic shift, because for so long, this was a bear market where, things were getting drawn down. It was almost like any sort of bullish news would still just face headwinds in the market because of momentum. Momentum was down. It was pulling all the fundamentals down with it. We had this massive news, DTCCs launching, tokenization services, New York Stock Exchange, RWA's tokenization, taking the world by storm. All of this bullish narrative momentum that's playing out. And yet we just couldn't catch a bid. And so what we're seeing play out now feels fundamentally different. And it's essentially that momentum has stalled. We've reached a point where there's very little volatility, but that means no more momentum to the downside. And so in this flurry of good news that we're continuing to see, no reaction. In the flurry of bad news that we're seeing, no reaction. And so what we've seen is that momentum has been sucked out of the market, and now we're able to value these things based purely on fundamentals. And now it almost feels like momentum is starting to shift because we had bad news that is now no longer weighing the market down. And so now the market has gotten totally apathetic to both good news and bad news. We can totally value things based on fundamentals. And this is the transitionary point where momentum starts to return. So I'm very excited. It feels like a disbelief part of the market, feels very apathetic. And that is what the market conditions that we find ourselves in today. Sully Sports Cards wants Bitminer content. Let's roll. We will cover Ethereum's proposal to reduce inflation. This directly affects Bitmine's preferred offering. I think it was at 9.5% or 11.5%. The thing that I keep coming back to on Bitminer, they just continue to buy where Saylor is now selling. So I think you've got sort of this three-person race, this three-company race for the best digital asset treasury management. You've got Tom Lee with Bitmine, you've got Saylor with Strategy, and you've got David Shamus with Hyperliquid Strategies. For a while there, I would say David Shamus was in the lead while Saylor and Tom Lee were just buying on the way down. Now I think Tom Lee is in the lead. He's doing incredible things. He's continuing to buy. ETH is turning around. Saylor's selling. He's dead last. And I think David Shamus is just kind of feeling out the market. Do think Hyperliquid is bouncing off the bottoms now. New type trader, yeah, it's tough if you're a cold wallet company, not gonna lie. Feel more safe using a custodian like BitGo or simply just buying a Bitcoin ETF. No one hacks BlackRock and they have FDIC. Yes, that is part of the conversation. CZ from Binance made this point as well. It is just statistically safer to keep your money in a centralized exchange at this point rather than self-custody. Market is tired of being bipolar, worse than my last girlfriend. King's Clips, man, you're a character. And Sully, Tom Lee is restless. Very well-ran company, excited for the future. I think that is what we're seeing play out. These are the markets powered by Zama. Let's check where Zama's token is today. These guys were doing fantastic. We had a Zama privacy day the other day, last week, where we covered all of their updates from Q2, and they find themselves in the midst of the privacy narrative. Squid's token went live. We're going to be talking with the Squid team in just a few minutes. Let's look up Zama. Where is this thing headed? Down a little bit, but man, almost at that 5-cent mark, had a massive jump. Feels like this is the correction that we were all waiting for. I mean, it almost basically doubled, maybe 80% climb from 3.5 cents to 6 cents. Now back down to 5 cents. So Yeah, pretty baller on Zama's front. Raised a ton of cash, helping keep RWA tokenization confidential. Guys, let's continue to move. Big shout out to Zama on the equities front, and big shout out to Near as well. The Near is another team that had a proposal go live with their proposal to reduce the inflation. They had a more novel way of looking at this rather than just arbitrarily lowering the inflation. They said that they're going to create a sovereign fund. It's going to start with about $30 million. They're going to generate yield on the $30 million, and the yield is going to pay the validators for economic security. This is extremely exciting. This is ultimately what takes an L1 inflationary currency and makes it fixed supply or even deflationary, which is obviously going to have significant impacts on the economics of this token. So I'm watching the Near token. You guys know I'm a believer. I think this is very bullish development, and Near is also doing great things with AI. They released Near staking, so now you can lock up Near, use it to pay for AI credits, as well as Iron Claw 1.0. So I mean, I think Near is going to be a leader of this upcoming cycle, especially as AI equities continue to rally. I would imagine that there's a rotation into crypto AI as well, Near leading on that front, as well as the privacy front. Lighter has a updated design, refreshed interface improvements, navigation, market views. These guys are doing incredibly well. There's a catch up between Lighter and Hyperliquid playing out right in front of our eyes. The Rifleman in the chat is saying that the clarity vote is imminent. Let's go ahead and play the clip with Lighter as we think about the leaders of this next perps super cycle. Very, very cool. This is Lighter bringing a new design to market. I mean, for so long, it felt like Hyperliquid was leading in the innovation front because they were bringing pre-IPO perps. They were bringing these things to market. That was very cool. Now, and I see you guys talking about this in the chat, is Trade XYZ going to leave Hyperliquid? I don't know. There was speculation that they are raising capital. I doubt it. And yeah, we did see Kobe confirm that. Lighter, on the other hand, feels like the more innovative perps team right now. So you consistently see them shipping new order types, shipping new asset listings, shipping new designs, new UX, web designs, overall usability. These are things that are happening on the Lighter side. And just frankly, I get it. Hyperliquid's still a nice place to trade, very, very liquid. But ultimately, it's still an open game. I mean, this is a wide open race. And the more innovative team is positioned to win. So big shout out to Lighter. I mean, you got all the user experience benefits of a centralized exchange, except this is a ZK decentralized perps platform. So very cool how they were able to bring together the best of both worlds. Bullish Lighter, and I'm sure you guys saw we posted a tremendous interview with the founder of Lighter, Vlad, just a couple of days ago. So go check that out. Let's keep moving along. I mentioned this in our Near shout out for today, but here's the proposal from Ilya. He proposes a new type of protocol fund. Posted this on the Near governance forum. I thought DAOs were dead. Here's the founder of a protocol posting on the forum himself. New type of fund to pay for public goods and make token economics more sustainable for the long term. Very, very cool to see a founder focusing on the token. This is obviously the value accrual mechanism. The thing is that this is already, technically it's fully diluted, but there is an inflation mechanism baked into Near. And so in this proposal, I just took a quick skim through it, but it does say how this new sovereign fund on Near from its treasury would effectively pay for what the token inflation is currently paying for. And so if this is able to be successful, you would effectively have $30 million. And again, you don't know how much this is able to generate on the very aggressive side. Let's say it grew 10% a year. You're generating $3 million per year. How much does Near need in an economic security budget? I don't know. But it feels like the validators are willing to secure the network for much less these days. It used to be like, well, if you had $1 billion on the network, you needed $1 billion in economic security. Not quite the equation anymore. Proof of stake is a little bit different. And so that's kind of what we're seeing play out. I think this fund would start out with 30 million. We don't know how much yield is going to be generated, but ultimately that yield is going to be used to pay validators. We also don't know how much in service fees these validators are going to charge, but I'd imagine it's a rather small-ish amount relative to the amount of TVL and fees and revenue that the Near protocol is generating. So I think Near is crushing it. This one still feels a little bit under-owned. It's just, it had such a run up in previous cycles that it's going to be difficult to get up to those levels. But they've also got this incentive program that I haven't heard them talk a ton about, but it's like this 333, like if Near reaches $3.33 and then some other some other price targets above that, it unlocks like these community rewards. So if the community rallies together, hits this price target, and if the moving average stays above a price for a certain amount of time, like everyone gets paid. There's obviously details in there, do your own research, but very, very cool program to see, similar to some of these other like KPI incentive programs that we've seen. Guys, we also have a liquidity protocol that is doing tremendously well. They just announced Aqua, the shared liquidity protocol, 1inch. Products like 1inch Aqua let you approve one wallet balance to back multiple positions at the same time across pairs, ranges, and chains. You're not splitting your tokens and you're not depositing them, but you're not leveraging either. It's a totally different way to keep your liquidity active in more markets. If you want to know more, check out oneinch.com/aqua. We're not going to spend a whole ton of time talking about the gazillionaire Jeff Bezos, but effectively what you have here is the hyperscalers returning to prominence. So Amazon was up like 15% the other day. Jeff Bezos probably made the $4 billion that he dumped in a single trading session. Pretty insane in terms of gains. This is $1 trillion company going up like a shitcoin. I mean, literally like $500 billion added to market cap in the span of a few hours. So yeah, no surprise Jeff Bezos is taking a little bit off the table and booking some of those profits. I don't think there's much else going on here other than that. I don't think he's doing insider trading or anything like that. Yeah, he took a little bit off the top because it was 15% candle to the upside. What the bigger story that's happening here though is that we sort of said that the Mag 7 was slowing down, and then you had this rotation trade that went further down the risk curve, right? It started with in the frontier models, private markets, right? But the hyperscalers built out this massive CapEx expenditures. They raised a ton of money. Then they ended up spending all the money that they raised. They put it into memory, they put it into chips, they put it into DRAM. And then those stocks ended up going up because they had all this increased demand from the hyperscalers buying their products. But now we've seen all of those memory companies, chip companies, DRAM companies correct. Hyperscalers, they also kind of stalled. Now it feels like the cycle is resetting, and the hyperscalers are leading the way. So Amazon is doing just that. Let's keep moving along. We've got Clarity this week. So Senator Thune, I think this is Senate Leader Thune or Speaker Thune, reaffirms the Senate will vote on the Clarity Act before the August 7th recess. Monday's Senate schedule had no vote of the bill. 4 working days remain. This is as of yesterday. Today still wasn't on the docket. And so we are going to need to just continue to monitor the situation. Today's Tuesday. It's not on the docket today. So we've got Wednesday, Thursday, Friday. We've got 3 days to get a cloture vote. if there is a cloture vote, it basically means that the Overton window is now inclusive of this bill. They vote to decide whether or not they even want to talk about the bill. Not just that it's going to go through or not. But the thesis is that if they can get this cloture vote before the recess on Friday, then you can put this forward on the floor and then you can actually start talking about it. And the theory is that if we can get the cloture vote and it gets the 60 votes that it needs, then it is a much, much higher likelihood that it actually ends up going through and we actually do get the vote for real and the vote does go through. So we are watching this like a hawk. We had several conversations about clarity over the last few days in Las Vegas. And so this is something that we are just continuing to watch because it is make it or break it time for the Clarity Act. So let's continue. Next up, we've got, let's see. What do we have up next? We've got another company that is shifting their assets from the layer 0 protocol over to Chainlink CCIP. According to Chris, who is a friend of the show and a representative of Chainlink, the tally is near $15 billion. Of course, remember layer 0 was, there was a whole debacle when it came to Kelp DAO and, RS ETH and all this shenanigans. But ultimately, it felt like layer 0 was to blame for this exploit. That cost a tremendous amount of value. It was a huge headache. And it threw off this RS ETH peg as a result of the DVM getting hacked, and it was configured in a very centralized way to begin with. And so there's been sort of this capital flight off of layer 0, and in this case onto Chainlink. And that is not just something that's been isolated to this move with BitGo. BitGo is the custodian, the primary custodian for Wrap Bitcoin. This is obviously still a $1 billion protocol. Even though you do have multiple other Bitcoin alternatives, Wrap Bitcoin is still very much up there in the lead with the rest of them. And so you've got Chainlink that is sort of just in the position where they've been doing this a long, long time. They are in position, they're trustworthy, they're resilient, they haven't experienced some of the vulnerabilities that layer 0 has found themselves with. And so they are now in a position to subsume a lot of the capital that is flowing off of layer 0. A lot of that has found its way over to Chainlink. So, that is just ultimately what we're seeing play out. $7.3 billion in Wrap Bitcoin assets, now part of the Chainlink CCIP program. We've got a couple more tweets that we're going to get through before we move on, just about 2 more. And so we're going to cover our partner, Dinari, who has founders from Stripe and Apple alumni, and they partnered with Circle to offer tokenized stocks to U.S. investors. This is a fascinating development. They've been friends of the show for a long, long time. We know tokenized equities are extremely exciting. This article is paywalled, so we're not going to scroll too far down. But what happens here is that Dinari plans to put the entire S&P 500 on blockchain rails, letting users buy and sell tokenized shares through self-custody wallets. Obviously, a big value proposition of tokenized equities is that it democratizes and broadens access so that people around the globe can participate in US capital markets as a result of these things being tokenized. But now Dinari is bringing tokenized equities to America, to US investors who presumably already have access to these assets. So you might ask, well, if we already have access and the value proposition is broadening access, why do we need this in the US? I think there's something deeper at play here. I think the real play is going to be collateralizing, margining, and making these equity assets more productive in the US. We don't have a very sophisticated margining system for these equities. And so that is what I think we're going to see. And I think Dinari is going to help us get there. I'm excited for a world where I can have, hyperscalers, I can have Mag 7, I can have indices, I can have all these things as collateral, or I can have them in a vault. They can be earning interest. There's so much more that we can do with our stock tokens, with our tokenized equities once they're tokenized, that we can't do currently with equities in a typical brokerage account. So it's very cool. And they partnered with Circle to use USDC for instant account funding. They also take advantage of instant settlement, which is very cool. And yeah, $60 trillion in the US equities markets. Dinari is going to be tapping into that on the tokenization front. All right. And without further ado, let's go ahead into our daily equity segment for today. Nice little segue there from Dinari. Our daily equity segment is powered by Dinari, and we're going to get right into it now. Daily equity powered by Dinari. Tons happening in the equity markets. We've hit all-time highs today after the correction, after Leopold was liquidated. Citadel says this is not a bear market rally. This is literally the cycle has reset and it's time to go higher in the equities markets. CMS here, big fan of CMS, and he's a friend of the show. He's been on a couple times. Always a great conversation. Here he's saying that he thinks an L1 should try and bootstrap equities, commodities, trading by buying a bunch of it, assuming they have cash, and then just flooding a bunch of pools against their L1 as much liquidity as possible, trying to set a standard for the L1 to trade against these stock tokens. It feels like Robinhood has done exactly this with ETH. If you go on Robinhood chain, they have seeded a bunch of pools. It's not quite flooding the market with these equities tokens with liquidity, but it is denominating most of these trades in ETH. I think what CMS says here is just incredibly thoughtful because this is the way to just vampire attack a ton of liquidity and then become the de facto place in order to get access to these tokenized equities markets on chain. And so if you do this, let's just play this out for the sake of our daily equity segment. If you were to flood the market with a bunch of equities tokens, let's say you just bought up a ton of equities, as a labs company, and then just permissionlessly put your token that you wanted into a pool with these equities, you could do exactly this. Create a bunch of liquidity. Anytime someone wanted access or exposure to these equities on chain, they would go through your token of choice. You could do this with ETH. You can do this with Solana. You can do this with really any token. But I agree with CMS that this makes sense to do at the L1 level because then they're the ones with the most capital. They can flood the market with liquidity. And this is essentially the way in which you can bootstrap liquidity and become the de facto venue for trading these equities tokens. That's been daily equity for today, guys. I think it's just a matter of time before we see someone play out this strategy. Coming up next, we've got Fig and Xtina, the founders of Squid. These guys have been building for a long, long time. Fig and Squid just go together like salt and pepper, peanut butter and jelly. And it's big congratulations to them for launching the Squid token. These guys are, they've been building for a long time. Like I said, we're going to get them up on the show right now. They're ready in the back. So let's go ahead and bring them up. Big congratulations for launching the Squid token. These guys are crypto native. You can tell because they use the money symbol as part of the ticker to spell Squid, and the ticker is Squid. Guys, Fig and Xtina, welcome to the show. Congratulations.
Thank you so much, and thank you for the shout out. We're very happy with the launch, but I think even more happy with the ticker.
Awesome. We've been friends for a while. We've been wanting to get you guys on the show. Thanks for staying patient in the back while we made our way through the news section. It's always fun when we can chat with a new team that just went live with their token. Typically, we see some eye bags, some sleepless nights leading up to these things, and you guys look like you guys have been hard at work, but you guys look great, and it's really, really cool to see this come to fruition. So just tell us how does it feel to have this token live in the market on a day like today?
I think first of all, euphoric. We're really, really happy. We're so proud of the team. So proud of and grateful for everyone that's believed in us and gotten us to this place. But I think Fig, you said it perfectly earlier. You pay for this with life force. I think I'm wearing my glasses so you can't see, but the rings are there. My whoop score is terrible.
Fig, Yeah, Fig, you too? Like sleepless nights or I mean, you guys have been building, you guys know how it works in crypto. Like we've seen this before, but launching a token is like nothing else, right?
Yeah, exactly. I mean, we've been doing it for, it's 5 years now, right? So it's been a lot of life force spent on this, but definitely the last 6 months leading up to this token launch.
Yeah.
It's been a big sprint, but it's an amazing result. So we're really happy.
And so tell us, like, why now? Because you guys have been building for so long, you've seen the ups and downs in the bridge space, cross-chain space, payments in general. You've seen all of these developments play out. What made you guys decide, like, hey, now is the time to launch a token?
Because no one else is, right? No, I think we were pretty aligned from day one that we wanted to focus on building a product first. We wanted to focus on building a product that there was a clear use case for, one that is beautiful, one that is easy to use, and one that is secure, and more importantly, one that has a continuous high retention rate of users, right? So effectively product market fit. Like that is what we wanted to solve for. And once we decided that, we were sufficiently at that level, we wanted to start thinking about a token and implement that into the ecosystem, right? And I think ultimately, you have to make those decisions independent of market conditions, even though that may feel scary and it may feel counterintuitive. Like you need to know when the time is ready, and that needs to be a decision based on your own metrics, right? And that's what led us to doing it now.
Well, like you said, you guys were, more intentional and proactive than just letting the market decide for you. But it also feels like now is the time, even if you were looking at the market conditions. I mean, it feels like we're at the precipice of some market conditions improving, kind of this transition from bear to bull. And so that is what people ultimately want to see. If you're looking, a year or two from now, in hindsight, it's going to look pretty nice if the market does turn around and rising tide lifts all boats, right?
Yeah, I think there's an element of we're so close to tokens and the market, like our product is buying tokens on all these different chains. And I think we could tell over the last few years that we were at the end of a bull market, and that a lot of the tokens launching were really for extraction only, and that's not what we're looking to do. So I think we're also very cautious of that. And it feels like a really exciting time for the industry. People aren't realizing just what's possible, I think, with crypto. The old dreams of sort of DeFi, I think we've moved on from, and there's obviously part of that growth in the next 6 months, not necessarily just on Squid, but in the whole industry.
Yeah. It feels like we are at this convergence point between several super cycles. We've got tokenization. We were chatting about tokenized equities a little bit earlier, and then stable coins, of course, perpetuals. Like, so much is coming on chain. A lot of that is becoming siloed. We know that there's not going to be one chain to rule them all. Like there, was a thesis that was going to be the case there for a while. And so we're going to need cross-chain. We're going to need routing. And you guys have done 6 billion, according to my notes here, in volume all time. And, pretty much been always on for the last 5 years. So just talk us through like what the growth strategy is, and then tell us about how the growth strategy correlates to value accrual. These are the kinds of things that like everyone wants to know about these days as it pertains to tokens. Is like, okay, if the protocol generates money, is that money going to flow to an equity labs company, or is it going to flow, to my bags, right? To the token. Can you just talk us through how value accrual works at the Squid, Squid?
Yeah, of course. So I think, value accrual to the token holders is incredibly important for us. And that's absolutely how we've structured this. I think ultimately, like we're already fee generating, and I think subject to governance and subject to further approvals, like that will effectively lead to buybacks. And we of course, we also have staking implemented into the token. So there's a very clear flywheel effect as to how there is value accrual.
Awesome. And obviously a big part of this starts with fees through the protocol. The protocol grows, it's able to monetize. And then, like you said, that flows into the value accrual component. So let's just talk about, the fees that you guys have been able to generate as a protocol up to this point. Where are we at now? And then how do we 10x this over the next couple of years?
Sorry, I was muted. So the fees we have on the app are coming through some of our partners. We've got about, over the years, we've worked with 1,500 different businesses. A lot of them don't exist anymore because that's crypto, but we've still got a few hundred live, and there's fees being generated on those. We've got fees on cross-chain swaps, bridging, single-chain swaps inside our own apps as well. We've got quite a few apps, both our own on our website, but also in partnership with MiniPay. And then we have also a lot of fees which are generated off-chain as well, not necessarily fees from swaps, but where these are all part of the same ecosystem. So, Squid is a really, really experienced and powerful tech team. We're mostly focused on like building really good products, good engineering, good brand, good design. And we work with a bunch of different partners to build crypto solutions. And I think over this next few years, like you say, we're at a precipice. We're seeing real finance start to come on chain or slightly be outdone by Onchain. And I think we've seen some of these deals progress much faster than in the last few years. Like, these things are starting to happen, and the revenue that we should be able to generate from that, I think, will outgrow whatever the 10,000 real users of crypto are today. I think it's going to get into proper institutions and like wider retail.
And is there a particular segment of this kind of like impending market that you guys are focused on? We've heard, some companies really hyper focus on the non-speculative, securities, if you will, like some of these funds, the BIDLs, right? And they're starting to go in a more KYC'd route. We've had other ones go in a more, equity focused route, more like the speculative ones. But again, kind of in this component of RWAs, I'd imagine that there's still a massive market here for crypto native tokens. And so where are you guys hyper focusing and targeting, or is there particular routes? You mentioned a few, great partners. Is there any routes that you guys are prioritizing? What do you think is the unique differentiation, the edge that Squid has versus some of the other cross-chain enablers out there?
True, yeah. Our big focus on partners, we've got 3 big focuses. One is Ripple, who I think don't get enough credit in the crypto ecosystem, but are doing an amazing job. They have this approach with RWAs where they're trying to make them native. Like, an RWA can be just a receipt token of something which is off-chain. It's actually an equity, that's the native part. But Ripple's trying to bring things natively onto the blockchain, and they've got the treasury and like the relationships in Wall Street and all over the world actually to make this happen. So we're working really closely with them on growing their chain, growing their tokenization efforts, working with them on payments as well. They've got an amazing stable coin called RLUSD that we work with. And then another very powerful institutional chain is Canton, who we just launched on a few weeks ago. And you only need to do a quick Google search to see Canton's got some incredible partnerships. I think the DTCC, got NASDAQ, Goldman Sachs, like, we've got huge names behind them. And I think that's still fairly early days in terms of real use, but we're seeing pilots come online, Squid's there, and we're very well integrated throughout the ecosystem already. We're working with most projects that are live there. So Canton's another really good one. And then Ondo and Xdocs, I think, are really exciting. Just the idea of having global assets available to retail, no matter where you are, and you can self-custody it, is incredible. So as well as those like huge institutional sides, we have a few other names on the institutional side we can't talk about yet. I think Ondo and Xstox are crushing on retail, and we're going to be doubling down there as well.
I think
Very
just
cool.
to add to that, I
Yeah.
mean, we've built like a real expertise in connecting and also adding support for these more, what should we call them, exotics chains, right? And like that sets us up extremely well for success in terms of adding support for all these asset types that are now coming on chain, right? So like Fig hit the nail on the head there in terms of global access. And I think you're exactly right, you know, like we now as an industry, and not just us, but as an industry, we have product market fit. And it's like, it's amazing, you know, that we have all of this, and the infrastructure is truly there to build a pure financial system that involves self-custody. And yeah.
Man, I want to be a believer in self-custody, but it's been tough the last few days, man. It's been tough.
True.
I do think we get there, and you know, with hardware wallets and with you know, some other tools, I think we can bolster a lot of that, and ultimately put the power in the hands of the people, put the custody and the assets back in the people's hands, so that otherwise it feels like, you know, what we end up with if we go too far in the direction of, oh, centralized exchanges are better than self-custody. If we go too far in that direction, it feels more like, you know, some of these like consortium chains with tokenized deposits are going to be moving capital behind the scenes rather than, because I take it, and I realize this is going to require some context. I take it that, you know, your business primarily benefits from users with their own assets moving it across chains. That's where a lot of the flows come from. Whereas, you know, if there was like institution that was maybe moving a lot of capital, but not doing it very frequently, maybe you guys could tell me how you react to that. Like the institutional use case of a lot of capital, but maybe only moving once a day or twice a day versus like a lot of retail flow that is moving very frequently and collectively is a lot of volume, but, you know, maybe small transaction size. How does, you know, your business react to those two different use cases, and are you targeting one in particular?
Yeah, I think you're right. We will stick to retail and small enterprises. And I think that's partly why the partnerships we're focusing on are so interesting, because Ripple has their own payments team who can do absurd size, like close to TradFi size. And that's going to remain off-chain. That's not going to be self-custodial. They'll KYB. They'll just handle the $100 million transfer you want to do if you want to do it. But they're not going to go and add support for all of these different chains, all these tokens. There's so many stable coins appearing these days, and you need some kind of normalization layer for them. So I think as we mature in crypto, we're going to be blending these two solutions. We're going to have the sort of the Squids of the world, which can get you anything, anywhere, very quickly, no KYC, and then you have the Ripples of the world, where maybe they need KYB, but they can do very large size and just a limited set of tokens. And we're already seeing institutions all over the world go in this direction, I think, where we've done a lot of work in Korea the last 6 months and have some good institutional adoption now. We're seeing like a similar thing where there's clear use cases where it's not good enough to have a enterprise user experience in a lot of cases. Even businesses want things to be easy, right? They don't want it to always just be a very slow manual process. They want to just go to UI and do something quickly. So I think Squid will still be able to sit in that range of being able to serve most people, and then once it gets into real super size, it's just going to go off chain.
Yeah, makes sense. All right, guys. Well, congratulations. I mean, it's been absolutely incredible to see the rise and the journey. Interop and cross-chain has gone on for, gone through so many ebbs and flows. And so now that the token is finally here, I'd love just, a last word on, if you were to give a message to the community, our community, as well as the Squid community, to close us out here. What is the elevator pitch on why they should buy Squid? Not financial advice.
Yeah, I was gonna say I don't know if we can. Huh? Except looking at like if our testament of life force right now is a testament to the effort that we're putting into this.
Well, you guys have been working hard. I've seen you at several conferences over the years. So it really is very, very cool to see. Congratulations, and would love to have you guys on again. And, we'll get this $6 billion of volume to a $10 billion in volume real soon.
Thanks, Laura.
Thank you. Thank you so much, guys. And congrats on your success as well. It's been cool to see over the years.
Much appreciated. We got to stick together. We're true OGs at this point, right?
I know.
Yeah. What's left? Yeah. Congrats.
All right, guys. Thanks so much for joining. We will we'll see you again real soon.
Thank you.
Thank you.
Thanks, y'all. Fig and Xtina, couldn't happen to a better group there. Very, very fun and good friends of the show. Really appreciate them for coming on. And we're going to keep the show moving. We've got Matthew Sigel, PM at VanEck, coming up. So he is going to be our AI Supercycle episode for today. And we're going to get him ready in the back. I think he is just about ready. AI Supercycle, tons happening on the equity side. I'm excited to get into everything with the on-chain economy and everything that he's seeing in the market front. So let's go ahead and get AI Supercycle. Andy's in the chat, my co-founder, my co-host out there skiing Patagonia like a legend. That's the man out there. Portfolio update. Yeah, let's get into a portfolio update here with our boy Matthew Sigel from VanEck. Let's go ahead and get AI Supercycle rolling. We're gonna do a quick standby. We'll be back on the AI Supercycle.
Yo, what's going on, guys? This is Itan with The Rollup. We're going to be patrolling the streets of New York City, getting answers to the questions that you guys have most. What are people trading? What are people investing in? How much do people actually budget? We're gonna have people from all over, all different investment classes, people who are dead broke, people who are dead whales, people who are just loaded. There won't be a mayor or politician to stop us on the streets. We're going to go everywhere, all 5 boroughs. We're taking over the 212.
We get deep, you know we get deep. We get deep. We get deep. We get deep hard. You know we get deep.
Welcome back to AI Supercycle, our premier AI show, airing every single week, presented by Near. We cover the ins and outs of decentralized AI, privacy, and the future of this massive technology.
Near is the blockchain for AI and the execution of AI native apps. You can check out Near's latest AI product at near.ai. Now sit back, relax, and enjoy the show. All right, we are here and we are back with AI Supercycle, the head of digital assets research at VanEck. Matthew Sigel is joining us today. We're going to be chatting about when this equities trade is going to rotate back into digital assets. I'm excited to get into it with Matthew Sigel. Matt, thanks so much for joining us today, man.
Good to be with you.
Absolutely. Matt, maybe you can just give us an update on, what you're seeing out there. It feels like we're transitioning. We had a market condition where it felt like no matter any kind of good news that we had, the market wouldn't react positively in the digital assets. We had DTCC coming on. Clarity looked like it was coming through. These things just weren't generating any kind of upward momentum. It feels like we've transitioned into a market where now we have Saylor selling. Clarity doesn't look like it's going to go through. It's not like we have any negative momentum either. Market feels totally apathetic. And it feels like the equities market and the AI trade is just swallowing up all of the liquidity. Can you just tell us how you're seeing this? Are you seeing this too? And what is your reaction to what's happening out there in the market?
Yeah, I think the first 5 months of the year were a very concentrated market. And what we saw was that the companies that were spending the most on CapEx had the best performing stocks. And since June 1st, that relationship has flipped. Putting aside the last few days where we bounced off the situational awareness bottom, it was the company spending CapEx that were getting punished. So I think Bitcoin and crypto kind of fell into the software bucket, right? So the semi to software ratio was something that a lot of people were tracking. And in the end, Bitcoin is software, happens to be open source software. But the things that you can do with Claude Code and with Codex, they're having meaningful impact on some of these open source software projects that are, their upgrade cycles are not as fast, not as top down driven as like Web 2 companies. You can't just force an upgrade. And we started to see, vulnerabilities. And maybe it started with like the Zcash issue. But I think that kind of software underperforming is a lot of what's been weighing on Bitcoin and crypto. And then it's just, the 4-year cycle and people kind of respecting that pattern. So I'm hopeful that this kind of changing equity market regime that we've seen since June will create some more balance, some more dispersion in the returns, and will bring back, the ability to harvest alpha from kind of single stock positions, single asset positions, rather than just the factor bet. I don't think it has to be, A works and B doesn't, B works and A doesn't. I think the market will be more nuanced than that. And in terms of my own positioning, still pretty exposed to the AI infra theme via the Bitcoin miners. Optimistic that Q4 will bring a bottom to Bitcoin and some more balance to the market. But I'm also kind of happy to buy on good news when there's some volume, rather than play this chop, which we seem to be in with the Bitcoin price.
Okay. Let's talk about where you're positioned now, and then we'll get into maybe the core Q4 bottom and some more of that thinking. But where you're positioned now, and there's some tickers here, but effectively it's Bitcoin miners converted into AI data centers because they've already built out the infrastructure. They've got power and energy capacity in rural areas. And this is all of the same raw components that we need to do a data center in AI. They can take the same hardware that they already have, switch it to a different product or a different end end product with the same raw materials end up becoming way more profitable. Mara, Riot, APLD, WULF, these are some of the tickers here. And so, this seems like it's a trend that's going to continue to play out. Data centers are just now getting built out, and there's still plans for a whole lot more. One question is how long you think this trend to continue for? And then the other is like, what kind of adverse effects here happen on Bitcoin if so much of the computing power and the hash power ends up leaving and going into the AI world? Obviously we have this mechanism where things balance out, hash power leaves to AI, the difficulty adjusts, and it becomes easier to mine Bitcoin. But at what point do we reach some systemic effects of a lot of hash power leaving the Bitcoin network? Could that pose for some systemic issues to the Bitcoin price?
Yeah, so our largest source of returns in the strategy that I manage, which is the Node ETF, and we launched now 15 months ago, and we've managed to outperform Bitcoin by nearly 100 percentage points, and that was driven by identifying early that the Bitcoin miners were being valued at a very low multiple of the megawatts of power that they control relative to the few data center REITs that existed at the time. So the early Bitcoin mining model was dilute shareholders with equity issuance to go out and acquire Bitcoin mining ASICs faster than your competition so that you can at least keep up with the growing hash rate. But because your revenues fall by 50% every 4 years, it was kind of a melting ice cube problem and a very capital intensive, not particularly profitable business model. And what we can see now from the debt issuance, not just from the hyperscalers, but on the back of these data center construction leases, is the cost of capital for these names has collapsed. They're able to fund their capital needs in the debt markets instead of the equity markets. And each successive lease that's been signed has pretty much been at better economics. And then you add on the lower interest rates to that, and there's been a lot of value creation. So that's where we've been when we the change in the market regime that started in June obviously hit the leveraged folks way worse than us. We don't run any leverage. We're very conscious of trying to underweight the companies that have the most leverage. And when we saw that it was taking down, a fund like Situational Awareness, where we had a lot of overlap with the positions, but here was a leverage seller being taken out by the prime brokers, we took that opportunity to lean in. We made the largest single day trade since we launched last Thursday morning at the open, exiting almost 10% of our kind of lower volatility, lower beta exposures, and doubling down on some of the miners that we like the most. So those are the actions that we've taken. We haven't seen any fundamental deterioration in the return on capital that the hyperscalers are expecting from this investment. In fact, if you read the transcripts from Amazon and others, those returns are tracking better than their earlier expectations, and companies that had been renting older GPUs for $2 an hour are now trying to refresh those contracts quite a bit higher. So, first and foremost, we're looking at the fundamentals. They're still improving, and it got to a point where some of our favorite names were pricing in just the value of their existing leases without anything ascribed to the terminal value of these data centers or the pipeline platform and the prospect for new leases. And that work was done even assuming that the 10-year rises another 100 basis points. So we saw a pretty good margin of safety at the lows where Leo was blown out, and so we've increased those positions. We can get into some of the historical analogies. People are comparing this to the railroad capex boom of the 19th century. I wrote a long piece about that. We can get into it. That lasted 20 years. We're in year 3 or 4 here. So I think there's a long way to go. And I don't think that there's a systemic issue to the Bitcoin price, because as you noted, the more the hash rate falls, the more that those who can stay connected will earn additional profits. So some of the names that we've added to, like Bitdeer and Mara, which still have quite a bit of optionality around whether to repurpose their facilities or keep mining Bitcoin. There could be a Bitcoin price here where people are talking about when pivot back. So that type of optionality we really like. And in terms of increasing exposure to, say, some of the altcoins or some of the kind of tokenization infrastructure companies, waiting for more clarity to emerge on Clarity or rulemaking by the SEC, or just better prices accompanied with some volume. Right now, the volumes have been pretty dismal across most of the crypto tokens.
Yeah, absolutely. I mean, that is it's a great explanation. And it's something that I think we've been watching for quite a while. And now we're starting to see how this plays out. And so when it comes to these facilities that you mentioned, this optionality where they, now are seeing the profitability of going and converting their data, their hash power into AI data centers for compute. But you mentioned how this might be a pendulum that ultimately swings back, presumably if the Bitcoin price appreciates to such an extent where now, despite, maybe another halving, block reward is lower, it still becomes more profitable for them to come back into Bitcoin and contribute their hash power and their compute into the Bitcoin network rather than some of these AI networks. Does this create some sort of like a reciprocal flywheel where they're almost chasing one another and spiraling upwards? Can you just talk us through what some of the financial thinking is as you sort of see this pendulum shift back and forth?
Sure. Fred Thiel, who's the CEO of Mara, was on a podcast a week or so ago, and he said that if Mara wanted to, they could fit all of their Bitcoin mining machines into the one new facility that they just purchased in South Texas. For those miners who are running containerized facilities, I think I just call it optionality to use these facilities for the purpose that suits them best at any given point. I'm not calling for a pivot back for those facilities that have already been repurposed. We estimate, for example, that CleanSpark would need 360K per Bitcoin in order to, say, tear up the lease that they just signed. So that's not going to happen. But in terms of moving these ASICs around into underutilized facilities while they prepare to lease them and make additional capex, I think that's going to be a viable strategy. So you call it a reciprocal flywheel. I would call it optionality. I would say that leveraged companies that are serving a new market are going to have a lot of volatility. And that's what we saw with Bitcoin in the early days. That's true in AI. If you can package these two volatile businesses together, maybe they can even themselves out. And I think that is still underpriced by the market.
Yeah. It certainly feels that way. And you also pointed to how sustainable this is. Maybe you could just give us a quick rundown of your article and how this comparison shakes out to the railroad. You mentioned that was a 20-year build out of capital expenditure. We're in year 3 of the AI build out. Maybe you could just help us understand why this comparison feels accurate. And I think that's what a lot of people are starting to question, is how sustainable is this? We've seen, these large capital debt raises by the hyperscalers. Then it felt like a lot of that capital started to move down the supply chain as the hyperscalers started to move. Then we got DRAM, we got chips, we got memory. And now it feels like things have reset. The hyperscalers are kind of coming back to life. Have we just gone down the supply chain, reset? Now we're going to run back the same playbook? Or, do you think You also mentioned dispersion. Do you think there's maybe some new market conditions at play here that we should keep an eye on, and why this go around is maybe not the same playbook as what we had previously seen in the AI equity markets?
Yeah, I mean, my bet is that the fundamental scarcity here is now atoms, no longer bits. We spent 3 decades deindustrializing the United States because commodities and manufacturing capacity opened up around the world. We learned from COVID that these integrated supply chains are vulnerable. And so there's a reshoring requirement here. And then you add on to that the demand shock from AI, where this intelligence cannot be served globally, right? France does not want their AI served from a US data center. So you essentially have to double build everything, and you lose those economies of scale. Plus the NIMBYs have made it so hard to build anything in this country. That puts a fundamental cap on how quickly this capacity can come back on. So maybe the Bitcoin miners were lucky, but maybe Bitcoin kind of always anticipated that the world would shift back from bits to atoms. We can debate that, but that's my thesis. And those who push back on it point to the railroad boom of the 19th century as a great example of a capex cycle that transformed the economy but destroyed a lot of the initial capital. So we can compare it on the scale, and then we can compare it on how it was financed. So on the scale, the US essentially put 3% of GDP into rails for almost 2 decades. We are now, I'd say, 5 years. This is year 5 of post GPT, and we're only hitting that 3% of GDP number once this year. At the current equity valuations, there's no way the market is discounting that this continues for 2 decades. In fact, most analysts see it peaking by 2030. So I see a disconnect in the scale, first and foremost. The second is that the railroad boom was actually government engineered. U.S. Congress passed a law in 1862, the Railway Act, and it granted millions, hundreds of millions of acres of federal land to these railways, but the titles would not transfer until the whole network was built. And not only that, but the US Treasury floated construction bonds, and those construction bonds were subordinated to private capital. So the government engineered a financing boom. The largest railways were selling bonds overseas that they were marketing as safe, which were dependent on these land transfers, these land sales, and the companies didn't even have the title to the land at the time that the bill was passed or that the bonds were sold. So that was a bubble, right? And the other thing is that these rail networks, they didn't provide the true utility until the East Coast and the West Coast were connected. You can contrast that to an AI factory, which as soon as it's trained the chips or has connected to the grid and has the proper fiber, it can start training models and serving inference immediately. There's no need for some type of global network to be synchronized. And then the last major difference is the contracted backlog that is supporting the financing around this. So, there was no one buying rail tickets in 1870 for a route that wasn't completed until 1885. There was no forward freight market. It was speculative based on land sales. Contrast that to these data centers where just the 4 largest cloud providers alone, Amazon, Google, they have more than $2 trillion in contracted backlog. Microsoft and Oracle are half of that. Many of those deals include customer prepayments, or customer supplied GPUs. These contracts are more than 5 years in duration. So there is legitimate purchase orders associated with the compute that will come out of these factories. And the financing is based on that not based on a government handout to the private sector as it was in the railway capex cycle.
Yeah. So now the conclusion of this argument is that it's much more sustainable.
Yes, more sustainable, backed by a private sector rather than government handouts, and secured by multi-year backlogs by the hyperscalers.
Fantastic. Matt, only got a few minutes left with you. Really, really appreciate that. And I've got this bookmark so I can read through the entire thing a little bit later. We've got a new type trader in our chat here that's saying he can't remember if it was 2021 or 2023, but you were calling that Solana needed to correct the pause button on the L1. New type trader here is curious, what would Solana need to do for you to remain bullish? I think, that's one question. And then I want to follow up. We see a lot of L1s starting to reduce their inflation and commitments to economic security, probably a little bit of a different question, but what would Solana have to do in order for you to remain bullish on Solana?
Yeah, we took down our kind of L1 exposures across the firm after the election when many of the tokens doubled and there was no acceleration in real world adoption, no app that kind of went viral and took in, global capital. And what we've seen since is it's been these corporate chains. Circle has one, Stripe has one, Robinhood has one, these kind of quasi-permissioned blockchains that allow public companies to customize the user experience and extract some of the economics. And I understand that's not in the spirit of open source development and new cryptographic money, but the folks who want to use these networks at scale want predictability of the fee stream. So I know the question was about Solana, but I'll pivot to ETH for a minute because it was an example of a chain that had very volatile transaction costs, and many large institutional participants, want more predictability. So generally, these corporate chains have taken a lot of market share, and that's been the focus of our investments since the election. Solana doesn't have that fee variability, but Solana still, until recently, in New York, you couldn't really buy USDC on Solana, and I think we saw another headline this morning, Wells Fargo working on tokenized deposits. It's going to be their own custom-built blockchain. The banks and the regulated entities don't want to put real capital on top of these open source chains. And then to the extent they do, they end up having to dilute their interest by supporting 3, 5, or 10 L1s rather than just one. So there hasn't, you have a market share loss, and then you have a lack of kind of winner take all characteristics within those that remain, and that's left us, very underweight these tokens. I think there could be there's many people who think like me. I'm not the only one who's thinking this. So it's one-way positioning, I'm sure. And if there's a Clarity Act that somehow passes, although the odds of that are at a year-to-date low, I think there'd be an enormous relief rally in some of these coins. It would provide a disclosure regime where we actually would know who are the beneficial owners. You wouldn't have people tweeting and shilling this stuff without having to disclose their ownership. You would see how many tokens the labs owns versus the foundation, et cetera. And it's been that lack of disclosure, I think, that has made many institutional investors ignore this space. So I want to see that change before we can get properly bullish on many of the L1s.
And last thing I have for you on this front, also on the L1 front, is ETH, Solana, and Near all came out with proposals to reduce the amount of inflation that they have going to pay validators. Ethereum as early as this morning. Solana, I think, put out this proposal earlier this week. And then Near has this fund that would generate some yield, and that yield would go to paying validators. All of this would take the inflationary supply of ETH, Solana, and Near respectively, down to almost zero if these proposals go through, still very early in the proposal process. How relevant do you think these inflationary measures are to the market conditions for each of these L1s? Do you think they have some weight, or is this thing really getting held up by the rise of these consortium private permission chains with the banks and the lack of clarity?
Yeah, I mean, we did an exercise a couple quarters ago where we looked at the average inflation rate of L1s compared to their user growth and fee generation, and there's definitely an inflation problem across the space. And we started this conversation by comparing the software companies to the crypto tokens, and the year-to-date outperformance of semis versus software forced a lot of these software companies to have a reckoning with how many new shares they were printing, and some of the dilution in that space has come down a lot as well. So I think it's an appropriate thing to explore. I think the details will matter. Let's see also what the impact is on companies that are relying on these staking revenues to fund initiatives. Like BitMine would be a good example. They're often touting their staking income, so that this could collapse. There could be second order effects, but I think it's wise now, 6 years after the L1 kind of birth to rethink some of the inflation.
Yeah, certainly. Matthew Sigel, director, head of digital asset research at VanEck, and PM of the actively managed VanEck on-chain economy ETF, as well as the Node Fund, which is doing incredibly. Matt, thanks so much for joining us, man. Really, really appreciate it. Great insights just across the spectrum, from AI, equities, all the way to digital assets, L1s, and beyond. Really appreciate it. I'm going to check out your article here on the comparison of the AI build out and the railroad build out in the US. Love to have you on again real soon, and thanks so much for joining.
Good to be with you.
All right, Matt. We're going to see you again soon. Guys, we're going to do a quick standby break, and then we're going to keep rocking and rolling here at the Rollup. So, guys, don't go anywhere. We will be right back with our next guests, M-Team and Slater. Thanks, guys.
Yo, what's going on, guys? This is Itan with The Rollup. We're going to be patrolling the streets of New York City, getting answers to the questions that you guys have most. What are people trading? What are people investing in? How much do people actually budget? We're gonna have people from all over, all different investment classes, people who are dead broke, people who are dead whales, people who are just loaded. There won't be a mayor or politician to stop us on the streets. We're going to go everywhere, all 5 boroughs. We're taking over the 212.
We get deep, you know we get deep. We get deep. We get deep. We get deep hard. You know we get deep. We get deep, you know we get deep. We get deep, we get deep, you know we get deep.
Money, power, and money, power, and
we are back live with M Team and Slater. These guys are building at Spire. Quick disclosure, Spire is part of the Good Idea Ventures portfolio company. We wrote an angel check, small angel check, but to support young founders in Ethereum. Very, very happy that we did, and excited for an update. Guys, Ethereum sentiment was not looking too good there for a little bit, and it feels like things have started to turn around. So I'm curious how you're seeing it from your sides, but first, welcome to the show. It's been quite a while for both of you guys.
Thanks, Robbie. Yeah, one thing on the market sentiment side, like we're pretty heads down lately, but in just about a week, we're gonna do a huge launch. We're launching a first party, consumer product. It's a trading application for using prop AMMs and also aggregating over all sorts of venues on Base. And I think Slater will talk more about some of the things we're going to be doing on that launch day. But going back to Ethereum, like this is an Ethereum product, and we're unashamedly building on the EVM. We think there's a whole bunch of like kind of different streams of momentum across the space right now. Like you have the hyperliquid side. Obviously you have, last guest was amazing talking about VanEck and some of the more macro stuff, I guess. And we're focused right now on a chunk of the market. We're focused on trading on Base, but our ambitions are much more than that. And I want to talk a little bit about that, but I'll hand over to Slater first.
Yeah, there's the old adage, best teams are built in the bear market, right? And you got to stick it out when the times are hardest, especially in this space, but really in every industry. But we've definitely taken that to heart, and this has been like a 2-3 year infrastructure build out that is now kind of leading to this platform where we think we can really make a difference in the EVM trading landscape. And so I kind of like the fact that we're finally getting to the point of taking this to market, and I'm joining the team at a time where the market's low and people are kind of looking for something new and interesting, and I feel like we have something new and interesting. So there's the market pains, but it can also be a good thing for a business as well.
Yeah. And just for the audience's reference, Slater is previously head of marketing at EtherFi, another Good Idea Ventures company, portfolio company, scaled 0 to $1 billion on the card volume. Very cool. And then Matt is product and strategy co-founder at Spire. Deep insights into MEV and everything kind of happening on Ethereum. And so, this feels like a rock star team. I guess two questions. Why the prop AMM and why Base? Those I think are going to be the two highest level questions to get into from a product standpoint. And then, there's plenty more that we can get into, but let's start there. What are you seeing in the prop AMM space? Why did you decide to allocate resources, time, bandwidth, mental energy into prop AMMs? And then we'll get into the whole Base aspect of this.
Yeah, Robbie, let me paint a picture for you for prop AMMs. So on Solana, everyone is so concerned about and prioritized on that trading experience, getting the best quotes on chain. You see some of honestly the best teams in this space. You have Ellipsis building out like just some truly incredible infrastructure, and what they're running into and what they're encountering is these prop AMMs that are run by real professionals. We have Wintermute running Tessera, and you have all sorts of other market maker teams that are putting their best trading teams onto these prop AMMs. And the reason they're doing that is because a prop AMM is like the next evolution of market microstructure. So for a long time in crypto, we had Uniswap v2. That's the big one everybody knows. Everyone can trade on Uniswap pools. Then we had Uniswap v3, which is an innovation that allows LPs to be more capital efficient with how they allocate capital to a pool. Now we have Uniswap v4, which allows pool creators and LPs downstream to pick and choose exactly how they want to allocate capital when, and you can build all sorts of like fancy mechanisms into Uniswap v4. And then in a separate parallel track, we have all these TradFi and centralized exchange venues use order books. They're just super low latency, high frequency order books. Now a prop AMM is where these two kind of parallel threads meet at the top. A prop AMM is better than an order book for all the things order books are good at, and it's a lot better than Uniswap v4 for trading on chain. That's why we're so excited about prop AMMs from a fundamental theoretical level, because we get better prices and we're tons and tons more capital efficient. Here's another number for you. So we've been talking to some market makers lately, and one thing that we hear repeatedly is that their cost of capital, and you can read that as like what yield they're getting, is maybe around 40%. And so for them to kind of be generating that revenue has to come from somewhere, and of course that's a whole other discussion. But what we recognized is that prop AMMs actually allow those market maker strategies that are yielding 40% in huge amounts of liquidity, and bring those to the masses. And so that's something we're going to be working on, is bringing that high yield to the masses and kind of decentralizing market making, but without all these trade-offs of traditional AMMs like Uniswap, where you're getting destroyed by LVR, you're getting bad quotes, you're just genuinely getting terrible quotes compared to what you can get off chain. A prop AMM is purely better on those aspects. Now you also asked why base. I think the base question is more of a technical one. We know the base team well. We've had quite a few conversations with them, and we're confident in that they're going to stick around for a while. Maybe a better question is like, why not Ethereum layer 1? Like, there's tons of teams who are building layer 2s directly on Ethereum, something we could be doing. Like Variational, you have Lighter, and I think these teams are making a real bet on Ethereum, and it's one that we'd love to make, and in a sense are making. It's just for now we'd like to start on base and expand to Ethereum, and so this isn't so much a bet on base as much as it is like a grounds for us to start building and start to get some market share in a smaller market first. Slater, do you want to go into some of that?
I like that you mentioned trade-offs, because this is, I'll put my simple BD brain and hat on for my explanation, which is basically every single trading venue to this point that we've come up with that can operate with smart contracts has been trade-offs, right? Is sure, now this can be immutable, now it can be universally accessible, but what's the cost of that? And the cost of that has been worse quotes than you could produce on a centralized limit order book. And prop AMMs are a huge step forward in that you can provide much better quotes, especially on top of the Spire stack, where you can basically quote for free and submit as many as you want because of the architecture, which I won't go into deeply, but basically the team has a long history in the base roll-up space, and we kind of have an L3 on top of base that allows us to submit submit quotes much faster and at much better prices than you would be able to on an AMM. And when you take this to like its theoretical limit, in theory, we could push this to a point where you could actually have better, more efficient price discovery on chain with prop AMMs than even a centralized limit order book. And so given that that's like theoretically possible, like that's what we should be chasing as an industry, right? Like, now how can we make this almost as good as clubs? How can we actually maybe even make something better? And so base is kind of uniquely a chain that the infrastructure works very well on, and then also has liquidity and network effects and users, as well as a new kind of push around tokenized stocks. And so we're going to kind of put all of that together, and some of the go-to-market stuff I had learned at EtherFi and consumer growth stuff we did there, and put it together in a really great retail trading platform that kind of takes it, again, to the conclusion. Like, what are we really trying to do here? We're trying to get people the very best prices they possibly can. And so the way we're going to do that is with literally what we call the best price guarantee, almost like Walmart Target style. Like, stop even worrying about all these different trading venues. Literally, we'll guarantee it, or we'll pay you 2 times the difference. And so that's kind of our marketing hook. You'll probably see a lot of that over the next few months, and we're serious about it. Like, the tech is that good. We're able to beat quotes on chain that consistently, and so that's kind of what gets me excited about this launch.
Couple of things here, which is very, very exciting to get this technology brought on chain, on base. One is that I recently saw this post. I think it was by Michael Aragov, who is the founder of Curve, and he said that there's intent-based aggregator solutions that are missing the best quotes, and so these are not finding all of the best routes. And so how are we able to essentially guarantee the best price? And then obviously you mentioned like best price guaranteed for people on chain. That also we can extrapolate that out to agents as well. Like, I'd imagine that agents are going to be trading for us at someday, and they're going to be scanning for the best venue to execute some of these swaps as well. And they're going to be looking essentially like aggregators at where they can get the best price. And so having the best price available to execute a swap has a ton of advantages because you end up getting all of this order flow. And, ultimately these things are just completely rational. They will go to where they can get the best price. And so how much in flows do you guys anticipate? You mentioned this thing is going to go live next week. What are we currently seeing out there in terms of trading activity on Base? How does it compare to some of those other chains? And how much of that proportionally do you anticipate is just going to convert automatically once this thing gets turned on?
Great question, Robbie. I want to go kind of one by one here, and I'll start off by saying, on the whole, price sourcing or quote sourcing question, the big thing here is that anyone who's providing liquidity or trading on a market is choosing a price, either implicitly or explicitly. If you're on an order book and you're a market maker, you're saying, here's exactly what price I'm willing to trade at and when and how much, of course. So for example, you might have a spread of 10 bips. You say, I'll buy it at this price and I'll sell at this price. They're 10 bips, 10 basis points apart. You could also go on-chain to something like Uniswap v2, where your spread is going to be maybe very low, but as you start to get a higher depth, that spread is going to increase. So for a legitimate, full trade of a couple $1,000s or something, your spread is quite high. Now you also have market makers who are, and maybe they're liquidity providers, maybe it's retail like you or I, but in most cases you're trading against one of the big boys. And they have their own preferences. They have their own pricing models, they have their own alpha that informs them what spread they would like to set. And most of the time that spread is kind of rapidly changing. If volatility goes up, that spread is going to change. If they see a huge order from Michael Saylor, those spreads are going to change. And so we have this kind of mismatch between what the venues support and what the market makers want to put on chain. The market makers, maybe they want to quote really tight, but Uniswap v2, they can't do that. Maybe they want to quote really loose, but Uniswap v3 is too brittle to allow that kind of flexibility at runtime. And so what prop MMs do is they unify that expression, those two desires perfectly. Because the market maker gets to put exactly what they want on chain with the most up-to-date information, with literally zero latency price updates. So that's very exciting. Is you can remove all of this middleware layer that's just causing quotes to artificially widen, because market makers are willing to put good prices available. They do it all the time on centralized exchanges. They have great prices. Well, let's bring that on chain and let's match that exactly instead of approximating. Now on the flow question, there's a big market right now on Base. One of the interesting things about EVM is that a lot of flow doesn't go through aggregators, whereas on Solana, a vast majority of flow is going through like DFlow or Jupiter. And that's just kind of a market structure thing that we're going to have to come up against. I personally think we'll be sitting in a position similar to KyberSwap, 1inch, 0x, Matcha, these aggregators that people use, and also as a backend to some apps people use. So we've already filled quite a bit of volume on FOMO through an integration we've done in the background, and it's not a direct integration. We have the FOMO, just to be clear, but we're connected with one of their service providers. So going through like kind of all these ways we can get integrations, I think we can get quite a significant proportion of flow. But maybe the bigger thing that we're exploring is how to actually grow the market. Because while we're still trading meme coins and crypto tokens on chain, I think there's a lot of that market we can capture, and it's a valuable market. There's been unicorns built off that. But I think Slater has some bigger ideas for what market we want to grow into, right?
Well, they're your ideas, but I agree with them. Which, look, if we can have a better price discovery mechanism than even a centralized limit order book, yeah, every asset should eventually use that, And I think that's like where Spire goes from like, wow, this is a really obvious go-to-market, strong team, really good investors, a piece of tech that gives you a real pricing edge that probably lasts a while. Okay, like, duh. Let's plug that in with all the aggregators. Let's make better prices available on chain. But then, yeah, with the advent of tokenized stocks, kind of all the excitement that's happening there, the amount of retail trading interest that exists, just to capitalize on the trend. I mean, that's the type of thing that you can really build enough momentum to reach escape velocity, and all of a sudden maybe this becomes an everything exchange, right? Where you can still keep those principles of self-custody, you can still keep your own assets on chain, but you have an end-to-end trading experience that can rival what's available in first world markets like America for stocks, right? Or something even better and even more unified, which kind of composability unlocks for you. So yeah, I don't want to be too long-winded, but the point is, not only can it be a great crypto go-to-market, maybe it could be something much bigger than that.
Yeah, I want to make that explicit. Like, we call ourselves like trying to get to the place of an everything exchange. I mean, everyone says that in crypto. And one of our biggest competitors at this point, I think, is Hyperliquid with Trade XYZ and all the things that they're listing, all these commodities and futures. Super cool. Well, we can have better prices than Hyperliquid. We have a fundamentally better theoretical market microstructure model for expressing market maker preferences on chain. And I think that's super important, and I just want to call that out.
Big shout out, M Team. A lot of people are too afraid of calling out their competitors because they're too worried about making friends. But competition isn't bad. We love competition here. Healthy competition gives users better prices. That's ultimately what we're doing here. Better experiences in general. So I love to hear that. And kind of on what both of you guys are saying, I think just on this everything exchange, tokenized equities, as this asset class gets built out on chain, this is a $60 trillion asset class. Another thing is that it's just so early. So it feels like the infrastructure is just continuing to play out. Earlier in the show, we covered a tweet by CMS that he posted earlier today, which was, maybe you guys saw this. It was effectively like, hey, if there's an L1 that decided to just flood the market with tokenized equities and then pair those tokenized equities with the native token, they would become the de facto venue to trade tokenized equities. I feel like Slater's like, oh my God, the strategy is out. Like, we just went public.
There's so many things that you can build with this, right? Like, I don't know, it makes sense for us to meet the market where it is, right? Put the technology in the hands of where the users are already trading today, go do all the integrations, so on and so forth. But yeah, ultimately, a million ways when you have, what the crypto market's been missing forever is just assets with real value, right? Like, once you have assets with real value, the alchemy that you can perform with them in crypto combined with something that gives you better prices for trading, the possibilities are endless. Now you're making me want to start an L1.
Yeah. Well, the thing is, you don't have to be an L1 to do this, right?
Yeah. Yeah. Well, I think it's really interesting, and maybe Matthew, this is where you were going, is if you start to enshrine this piece of tech deeply within a blockchain is when you can really start to accelerate the outcomes as far as prices. I'll just say that.
Yeah, that's right. I think to me, there's what crypto as an industry has been driving for a long time is bringing price discovery on chain, and part of that is price discovery on existing markets, but also there's, I think, a lot of markets that can only exist on chain or that will only exist on chain. For example, like price discovery on a lot of these huge private companies right now is terrible. It's done completely off chain. And I want to bring that on chain. I want to bring OpenAI on chain. I want to bring the next startup that is in the YC batch right now. I want to bring that on chain. And I think bringing price discovery on chain in a way where market maker preferences can actually fit the market and aren't like all crammed into this honestly centuries old microstructure of a central limit order book for every market, with futures and derivatives kind of laid out as their own markets. Well, we now have programmable trading environments. Before it was completely impractical to say like we can insert the Wintermute brain into your order book, but now we can do that. And I think bringing that expression closer to reality is going to enable a whole new class of markets, and at Spire we're building that. We're not just talking about it. Like, we're out there, we're doing the integrations for now, but we're also building out the future as well.
Yep, it's very, very cool. Guys, just a couple of minutes left. The go-to-market is happening as we speak, going live next week. Does it have a name? Is it just called Spire? Where can people find it? Are you guys doing a points program, incentives? No harm, no foul. If you guys aren't, like, honestly, cool to see these things just interact in the wild. But I want to make sure that our audience gets, all the download, because this thing is coming out pretty soon. And we want to make sure that everyone goes, tries it out, uses it, sees the prices that they can get.
Yeah. So we will be doing a points and incentive program. I am pro points and incentives. I know EtherFi gets some flack for my opinion, doing it very well. But I think the teams that do it well still benefit from it, and the community still benefit from it. Like the core idea of sharing ownership and upside and utility tokens in the ecosystem is a good idea, right? But it's all in the execution, and so we think we're going to do it the right way. And the website is actually called BaiBai, BAI. It's the Japanese word for trading. I think we used the same design team as many of your favorite projects, so you'll probably enjoy the UI. There's a cute little capybara, and the UI I think is pretty engaging. It does its best to really show you the outcomes in real time and what's happening underneath the hood. So you'll see quotes from various venues in the base ecosystem kind of all right next to each other. You'll get a cute little receipt as soon as you make a trade, and it'll show you exactly how much money you saved. And one of the fun things we'll be doing over the next few weeks is like a report where you can scan your address, see all your trading history, see your total P&L, and see the MEV, bad pricing, ways that you've lost money on chain without even really knowing it in the past. And based on how wrecked you are, you'll get an additional 5x points boost for your initial trading volumes. So that was something. It's mostly selfish because I've lost so much money on chain. Just trying to help myself out as part of this go-to-market. But yeah, please give it a follow on Twitter, BAI _CX, and check out the website and pay attention over the next few weeks. We'll be making some more noise about it.
Very cool. Guys, thanks so much for joining. I'm excited. I'm going to try it out. I need an aggregator. I need a way to get good price execution on chain. So I'm going to be going to BaiBai and going to say bye-bye to my coins.
Bad prices. That's
Hey, bye-bye to bad prices.
Yeah.
Have a good one, Robbie.
I'll see you guys soon.
Thank you so much. Bye.
Cheers, y'all.
Cheers.
All right. We're going to keep things rolling on this side. And yeah, proud angel of the Spire team. These guys are doing great. Prop AMMs feel like they are the future. And the on-chain to the decentralized exchange to centralized exchange ratio is just continuing to shift in favor of the decentralized exchanges. So it's very, very cool to see. And I think we're going to continue to see how tokenized equities play out, which plays into our next guest of Dinari. And so Gabriel, the co-founder of Dinari, is going to be joining us here very soon. We're going to get him ready in the back, and we're going to close out the show with a tremendous last guest. Gabriel is the co-founder and CEO of Dinari, a regulated platform that issues one-to-one backed tokenized U.S. stocks and ETFs. We're going to bring him up in just a moment. Previously founded Freenome, AI-driven early cancer detection company that recently went public after earlier work as a software engineer. Fortune article just went live today that said these guys partnered with Circle, and I believe USDC is going to be the margining of choice for these tokenized equities. These guys are going to be launching in the US. So very, very excited to chat with Gabe from Dinari, co-founder and CEO of Dinari. Here he comes. Let's get him up on the show. There he is. Gabriel, welcome to the show.
Thanks for having me.
Absolutely. Congrats on this announcement that went live. You guys are coming to the US and partnering with Circle.
Not coming. We're alive in the US.
There we go. Okay, so why don't we start there? I mean, where can people participate? Where can they get their hands on tokenized stocks? What stocks are currently live, and how can they find them?
So it's a complete change in paradigm. Today, if you want to go buy stocks in the US, you have to go to Schwab or Robinhood or whatever broker dealer. Now you can come directly with your wallet and your stable coin, either to app.dinari.com or any one of our partners. We announced a few wallet partners today, like Privy and others. We will be launching with other partners very soon.
Very cool. So a lot of the value proposition, a major piece of this that we've been talking about on the show, and Dinari is our tokenized equities partner on the show. So you guys have been fantastic. And so we've been talking about tokenized equities a lot over the last few weeks and months. And a lot of this is about broadening access, democratizing access, bringing the US capital markets outside the US to the globe, and helping those who previously didn't have access now get exposure to US equities as a result of tokenizing them and putting them on chain. You guys are now bringing tokenized equities to the US. And I think, just to clarify any confusion here, the D share is a true stock. There's no SPV nonsense at play here. This is a true stock with all the same shareholder rights. Now, I'd imagine that there's a lot of value at play here with tokenized equities in the US. You can do fun things with margining, collateralization, making these things productive. And I think the slogan is do more with your stocks, right? So I'd love just to kick it over to you for a little bit of a deeper explanation about what the value is of having tokenized equities here in the US.
From the standpoint of customer access, there is this wonderful idea of actually owning your stocks, which, by the way, today, if you're to buy stocks at Schwab or something like that, you own an entitlement. You do not actually own the stock. It's very not portable, right? You can't just do whatever you want with it. It would take weeks to even get it out of the accounts. So part of it is just financial freedom, which has always been a promise of this entire space. However, obviously, we're working on much more interesting things, some of which I can talk about now, some of which we'll talk about later. But I think ultimately there is this immense benefit for the end user as the wallet experience has gotten better of being able to control your financial life in a single place. And that is not a single place that locks you into that place, whether it's, Robinhood or something along those lines, but it's a single place called your wallet that you own, and you can take it to whoever you want and transact now stocks and crypto and bonds or whatever it is, all alongside the stable coins that you hold. Eventually, there's going to be a transition where the capital market infrastructure, and this is where Dinari is really focused on in the US, is replacing the existing legacy infrastructure with blockchain-based infrastructure, not only at the broker-dealer level, but also at the exchange, like national exchange level, that will unlock benefits to the US customers, such as native swaps. So like swapping directly from Apple to NVIDIA. No more waiting days to settle into fiat and going into another ticker. Why is that so important? Well, one is speed. But the second thing that most people discount, that's the biggest gain, is when you swap from one ticker to another directly and you never settle to fiat, you have to ask yourself the question, is that a taxable event? And can you now keep your money in the capital markets while investing in new assets and not be taxed on every time you have to sort of come out of the asset in question? And this I care about so much because it actually benefits the poorest of us, because the poorest of us cannot have net new capital that they're putting into their brokerage accounts all the time, which means almost inevitably they are always coming out of one ticker and going into another ticker. And that you mentioned about geographical democratization. I also care about socioeconomic democratization, and that's why this news is so exciting. And this is just the beginning of some of the things that we're going to bring to the U.S. markets.
Yeah, this feels huge. I mean, this is a $60 trillion market, and it still feels incredibly early because we have just tapped into the $60 trillion of equities in the U.S. capital markets. And so, I mean, it feels like there's real implications here. It feels like there's both this retail angle where, you know, you can get broader access, and then you can also get like the institutional angle of just getting, you know, less, I mean, faster settlement, of course, but also less tax liability is such a huge value proposition here for all of those across the investing universe. And so, I mean, I'm on app.dinari.com right now. I can see the NVIDIA stock here, NVIDIA Corporation common stock. You guys have, you know, several on here: Tesla, Cisco, Google. Like, there's tons here. I think you guys are planning on tokenizing the entire S&P. And so there's
already did the S&P 500, pretty much every ticker on there, and pretty much any ticker you can think of.
So, Gabe, talk us through a little bit about how this works, because, you know, we've talked to some people on the Robinhood side about how they're bringing tokenized equities online. You know, they're kind of minting them on demand onto Robinhood chain. How are you guys, if I were to connect my wallet and go through the process here, is there a particular chain? Have you guys, you know, already, you know, just hoovered up a ton of equity liquidity, and that's what you're serving to customers? When I click buy, you know, what is sort of what happens after I click that button?
Yeah. So it is all automated from the user's perspective, right? But we did want to bring the best experience possible to the users. So when you click the buy button, if it's during market hours, it will mint on demand through the market. If it's after hours, it will go through our ATS. And then if it's during the weekend hours, it will go through our Dinari Financial Network, which is our on-chain order book that has its own liquidity providers, such as flow traders and other major liquidity providers that are their sole purpose is to make sure that you have the best spread possible during the weekends of any on-chain order book out there.
And they're streaming quotes even while the market is off.
Right.
Awesome. And so the market could be closed or it could be open, but you're streaming quotes to anyone on the Dinari website that wants to come and purchase stocks. And those stocks are just provided on demand, depending on whether you're within market hours or on the weekend or during closed market hours. The liquidity, the equity could come from a different source, but that is the source that's providing the quote. And then you guys are just routing the capital, routing the order behind the scenes to whichever venue happens to be online at that time.
It's across chains. So DFN, the Dinari Financial Network, is natively multi-chain. So we have everyone from Base to Avalanche integrated. So the liquidity might not even live on the chain that you're originating the order from, but it will come to you, and the transaction will settle instantaneously, and then the sort of cross-chain settlement will happen after that. But the price will be locked in. Everything will be transacted. The important part here also, though, is app.dinari.com is probably the least interesting place you can go and buy it. Like, eventually, it's every wallet, every app that you can think of will be part of this liquidity providing engine. As you rightly pointed out, it could come from, like, there could be an order that's made on one of our exchange partners, right? That's really coming from somebody wanting to sell that stock on a wallet app somewhere else, right? And it's so really this idea of aggregating the liquidity on a coordination layer so that ultimately everyone benefits from maximized liquidity. And there's a lot more partners to come on this that I can't name today, and I really want to, but it's only going to grow from here.
Incredible. Well, we are going to bring you back when you can talk about those, but we've got more to talk about today because, you know, this is a really exciting launch. Not only that it's happening in the US and we're based here, but also because you guys have what seems to be the broadest, like the most breadth when it comes to the tokenized equities offering the entire S&P, which is just a tremendous feat because it is so many assets. And previously the models have required to hold inventory of these assets. And so this feels fundamentally new and innovative. And so it's very, very cool. And so let's talk about, you mentioned after you press that buy button, what happens? It kind of depends on whether the market's open or closed. And then, the trade gets routed to one of those liquidity providers, and then it gets minted on demand. And so it lands in your wallet on a chain of your choosing, ultimately. And, then what can we do with this to make this more productive than just a typical equity we would hold in our brokerage account? Can we use this as margin? Can we use this, combine it with other assets on chain and put it in a vault? Can we earn yield on this? What is now possible as a result of making these equities tokenized?
Everything that you just mentioned is possible now. And again, this is where the partners are very important. We're gonna announce some partnerships around this very soon, because Dinari has always been, let's do things compliantly. Let's do things in a way that protects the end investor. And so we're obviously not going to, allow sort of people to get rugged and, things along those lines. So we pick our partners very carefully. But everything that you just mentioned is going to be possible.
Wow. I want to ask, how important is the Clarity Act? It's do or die time. I just know that if we talk about this, people are going to chime in and they're going to engage with it. So I want to ask you, how important is it to Dinari to get the Clarity Act through? What kind of business lines does it unlock? And what can you guys just go ahead and do anyway, even without the Clarity Act in place?
Yeah, so I think the Clarity Act is going to be really good for the industry as a whole. But as we just demonstrated, it is not the only way. For so long, people in this industry have said, to get tokenized stocks in the US market, there's only one way, and that's the issuer-sponsored way, where you have to go and ask each company whether they're going to tokenize separately outside of the existing capital market system, their cap table, so that they can have those tokens available. We just demonstrated that that's not needed, and you can still be legal and within the Reg NMS, the National Market System, and launch these tokens. Now, the Clarity Act is only going to solidify that and clarify that even further, which is not a bad thing. But I think that broadly speaking, Clarity Act is going to be good for the crypto markets. It's going to make institutional partners much more comfortable with engaging with tokenized stocks. And like you said, we're in the first part of the first inning, man. Part of the first inning in terms of the capital markets transformation, and the Clarity Act is only going to accelerate that.
Yeah, it is really, really exciting. And we talk about this a lot. This is a thesis that Andy and I on this show, we like to call it the neo-finance thesis, which is that we are now in the midst of this tokenization super cycle. There is quite literally trillions of dollars at stake here that is now coming on chain. Dinari is, you're carrying the flagpole, and you're the flag bearer of the tokenized equities industry here. So you're bringing a lot of this on chain. And part of the thesis is that all of the DeFi protocols that were previously just, valued based on the TAM of crypto native tokens, we have 2 trillion or so, total market cap in crypto. That is now getting re-rated. And there is a, 30 to 50x the total addressable market potentially at play here that is going to then flow. These tokenized equities are going to get tokenized and come on chain, and then they're going to flow into these DeFi protocols, which ultimately just levels up the lending markets, the decentralized exchanges, the vaults, the perps. Everyone as a result gets this massive upgrade. And so you can kind of guess as to what happens to asset prices as well. And so, man, I want to talk about these new partners, but I guess just broadly, generally, where are you most excited about? Things are tokenized, they're brought on chain, people go to Dinari, they buy these tokenized equities. Then what? What are you most excited about? What happens after someone buys their equities on Dinari? Is it the vault complex or the yield or the margining or the collateralization? Where do you think there's going to be a really, really killer use case for these things to flow after someone brings them and buys them on chain?
Again, I go back to why I started this in the first place, which is making accessible tools that are only for the rich today for everyone. So, for example, if you have enough stocks in your portfolio, you can margin against that portfolio. But if you only have a few shares here and there, that is not possible today. You can't borrow against it. So you have to do the worst thing possible, which is sell that stock, get the tax event, right? Get the tax, and then use that capital for something else, and you're not even invested in it anymore. Atomic lending and borrowing on a per ticker basis is going to be so big to make it sort of accessible. And just to be very clear, again, to democratize it as much as possible, I think we need to be linking up with all the neobanks that, with people that have hundreds of dollars in their accounts, get them to invest in these stocks, and then be able to borrow against it and use it for whatever money that they have without ever coming out of that investment. That's a ridiculous concept from a perspective of traditional finance. It's now going to be possible at whatever neobank that you want to do this at, whatever you already use, no matter what the socioeconomic level you're at. So to me, that's a phenomenal application of something like this that just isn't possible today.
Yeah, it's incredible. And just talk us through how you guys were able to accomplish this, whereas others failed. Because I remember, and I forget if it was OpenAI or Anthropic, but there was these, pre-IPO markets, and it felt like there was two ways to do this. Either you could go through these hula hoops of SPVs and tokenize some of these things, or you had to go and talk to all the issuers, as you talked about earlier. These felt like neither one was, on one side, it wasn't quite realistic that all of these were going to elect to tokenize their shares. On the other side, it felt simply dangerous to have investors exposed to all these SPV wrappers. Is it just that you were able and willing to do the hard work of compliance where others didn't? Or was there something that you figured out technically or regulatorily? How were you able to bring this to market whereas others failed?
It's actually all of the above. We were willing to work with the regulators. That is one thing. And then we listened to what they said was needed for this to fall within Reg NMS and be legal. What they said was needed is super boring and very complicated infrastructure that you had to build. And that's a credit to our engineering and product teams, as well as the FinOps teams, to actually make this work. But it was just grueling work. Actually, this has been years in the making now, between the regulatory clearance that we got. I don't know if you remember, but we actually said this publicly. We were the first ones by FINRA to be given the permission to tokenize these stocks, and that was announced a year ago. Mm-hmm. And then it was like between that and like making the product real in terms of actually getting it out there in the US was just a monumental effort. I give so much credit to my team.
Yeah, it is fantastic. And I think now you've set the example for others. And so when you say it was the boring hard work that you guys had to build, is there anything like this that exists? What is there things like this that exist in the traditional equities world, but they didn't quite have the crypto perspective on it? Or is this simply because you've got kind of this dual perspective in the equities world and the crypto world that you were able to bring this to market, and it is totally unique, totally new?
It is totally unique and totally new. People talked about for a while like wrapped and unwrapped, and that was the argument, right, and things like that. And like this is neither. It really is its own thing. But what I will say is we're already talking to broker dealers. Again, can't mention who or something like that. But broker dealers today, let's be very clear. Broker dealers today cannot take stablecoin as payment for stocks. Let's think about that for a second, how mind-blowing that is, right? If they work with the Dinari infrastructure and integrate our technology to do it, they can. And so it's not that we're holding this technology that we have built tight to our chest. We're actually making it available for everyone.
There's broker dealers that I've heard that are building their entire ATS, alternative trading systems, because they want to accept stable coins. And you're saying that, hey, you don't need to build an entire new ATS. You can simply plug in Dinari and accept stable coins and get the same sort of functionality that you would get if you built out this entire system.
API integration.
Yeah, this is going to be huge, Gabe. What are you going to do with all the money that you're going to make?
Oh, I already have money. But to me, this was never about the money. It really isn't. And if you actually look up the other co-founders, who, by the way, are way more impressive than me, right? We have Chaz Rampenthal, who did LegalZoom. And then we have Brandon Uy, who did Crunchyroll. To us, thankfully, we've all had successes in our previous companies. We wanted to do something big. And we wanted to do something that I actually said to investors when I raised money for this, there's probably less than 1% chance of success. But we did realize exactly what you're saying is people around the world don't have access. And actually the poorest of the people in the US don't have access. And we need to bring this, the best assets in the world to those hands. And that's been the promise, right? That's been the promise literally of the entire crypto space all along. And we finally, 5 years in, we get to fulfill that promise.
And you just so happen to launch this the day after Leopold's situational awareness goes kaput. So did that factor into the timing at all?
No, not at all. but again, here's what I will say to your viewers, and sincerely, I was not planning on starting another company because thankfully, and I really thank so many people for this. My first company was successful despite me. But then when I made some money, I actually realized just how much the capital markets were designed to make the rich richer. It really is. In a way that was mind blowing. And so the promise of Dinari has always been access. I'm really glad that we're taking the first major step in that now. Like I said, 5 years in, but we're definitely not going to stop because it really matters to us. It really matters to my co-founders and I that we're doing something that actually makes finance better for the majority of us, not just the people that are lucky enough to have made some money.
You know, you're absolutely right. And I think a lot of people are, they came into the space, some have left, some are still here, but they're somewhat disillusioned by the institutionalization of the space. They see a lot of these consortium chains and tokenized deposits, and they feel like we've lost the plot. And I could see how they think that, but when there's a company that comes in and they're looking at broadening access for an asset class and the equities market, which has been typically just taped off from those that didn't have access, it just feels like we're returning to our ethos and we're applying some of the same principles that we're now applying in a new regard, in a new asset class, which makes me really, really hopeful for the future. So it's inspiring what you guys have done. And Gabe, I really appreciate you coming on during a very busy time. I get it. It's very, very busy dealing with the regulators, but hopefully you had some more fun with us here today than, building out some of the compliance tech. And we're very excited about the partnership. We appreciate your support. We love supporting you guys. And come on again soon. And we'll talk about some of the partnerships that you couldn't talk about today.
Thanks so much, Rob. Appreciate it.
Absolutely. We'll see you again soon. Thanks, Gabe.
Bye.
All right, guys. Well, there you have it. That's been Gabe on Dinari's launch in the U.S. around U.S. capital markets and the equities market in the U.S. Man, I mean, personally, I'll just tell you guys a quick little anecdote. I was sort of a born on-chain. I'm crypto native through and through. And so I had a crypto wallet before I had a brokerage account, which means that it was easier and more familiar for me to get access to crypto native tokens like ETH, like Bitcoin, than it was to get onto a brokerage, do a bunch of KYC, and go buy some equities. So there's a lot of other people out there like me that have followed a similar journey, whether that's in the US or abroad, and now they're looking at the just absolute phenomenal rise of the US capital markets, which feels like it's just going to continue. I mean, now people are saying that the policies on a macro level are going to keep this thing running right through all-time highs, all the way up to midterms. We'll see. But guys, that is our show for today. We don't have any more guests. So fantastic show. It's been an absolute vibe. Let's see what we're doing on the markets front. I know S&P's breaking all-time highs as we speak. Europe could foot the bill in a new plan to reopen the Strait of Hormuz. And then I've got Oman and Iran reaching a deal or proposing a deal. So seems as if the geopolitical situation is improving. We saw the US intervene in the Japanese yen market. So the macro situation is looking a little bit more expansionary than it was last week, contraction. And we have tokenized US equities to the tune of the entire S&P. So it's pretty cool. It's pretty cool things that are happening out there. Massive SpaceX shorting ahead of earnings. And then the Clarity Act. The Clarity Act, the Clarity Act, the Clarity Act is right in front of our faces. We've got 3 days. It's not going to happen today. Maybe it happens tomorrow or the next day or the day after that. Guys, be ready for some volatility to end the week. Markets are looking good. Gotta say, markets are looking good. Do your own research, but I'm bullish, guys. People are going to say out there, they're going to say it's chopped. They're going to say we're ranging. They're going to say, we've got one more leg down. I don't think so. I think the sentiment out there is that this rally would fail like all the others. Equities are just continuing to rage on. I do think we don't really start to move until there's some sort of capital rotation, because I can understand, why are you going to go into crypto right now when AI is just going ballistic in the equities markets? So we're watching that. We're watching everything. We're monitoring the situation, and we are rocking and rolling with you guys as always. Shout out to everyone in the chat. Give me some dubs in the chat for your boy. And we're gonna catch you guys tomorrow. A little bit of a later start tomorrow. We're going to be starting about an hour or two later than we typically do. Got some things going on at the house. But guys, we're going to do some incredible work together. I hope you guys are prepared for the bull market. I certainly am. I'm excited. I'm going to see you guys soon. King's Clips, you're the man. And we're going to be rocking with you guys tomorrow. Much love. Peace. Stay bullish.